following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Jim in Palm Harbor. Hey, what's going on, brother?
Hey, how you guys doing today?
Doing great, man. How you been?
Oh, great. I really appreciate you and Tommy. You do a great job, great work, and I really appreciate it. I watch you every day.
Well, thank you so much. We appreciate you growling and prowling with us out here, man. Let's go to Sylvia in Tampa. Hey, Sylvia, how you doing?
Hey, Tom. Good morning. Thank you so much for taking my call. I want to tell you thank you so much for the advice you gave me on dust yesterday. I exited when you told me, and I made a healthy profit for a very short period. So thank you.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Always do your best. Take action on your ideas. Love this card. Doing your best means you take action on your ideas. There are many great ideas in your head, but without action upon your ideas, there be no manifestation, no results, and no reward. Market-wise, let's take a look at it out here. We have the Dow Industrials right now down 242. NASDAQ is down 74. S&Ps are off 26. Bottom line, that they're all indices are off about 0.9 to 1% right across the board. Gold contracts down $27, trading at $12.91. Bottom line, gold blew through its B point, blew through with monster volume, by the way. We get a ABC structure on the way down. $12.69 is the number. Silver's down at 35 cents, $16.22. You get copper trading at 305. That's down 3.5 pennies. Light sweet crude hanging tough, up 23 cents, $71.19 a barrel. Notes and bonds. You get the 10-year note down 18 ticks, 118.27. 30-year bond down a point plus 17 ticks, 141.08. If we go up and we take a look at that 10-year, what you have with the 10-year, that also is an ABC structure on the way down. Blows away the B point, does it with volume. The B point had 1.6 million contracts. You're doing 2.1 million contracts. We are at 118.21. That sets up a 117.16, and that's a whole nother point down. The cool thing here, inside the bond note market, as well as the gold market, is that what you have here is that you have not only just an expansion of volume, it's a very unusual expansion of volume. So the bottom line is that it's going to be intriguing to see how this shakes out coming into tomorrow morning, if either one of them can actually get this ABC structure on the way down. What normally happens, folks, your probability is very high that you're going to get it when you blow through a swing point like we have. Now, that being said, the expansion of volume out here has been dramatic in both of those. 30-year note. What do we have with the 30-year note? That also blew through the lows. Now, the last time that we were down inside the 30-year, it didn't get the low. The low is 141.14. That was the February 21st low. Bottom line, you blew through that. Let's get another ABC structure on the way down. I'll have to do that one at the break. Well, I'll see if I can do it quick. 147. That's about 47, 5.5. That's going to put you at like 139. It's pretty intense, actually. And if that's what we get, you have the 30-year right now trading at 3.06. That'd get that's the 10-year. That would get the 10-year up into the 3.1 number, big number. King dollar. What do we got with King dollar? So we take a look at King dollar. King dollar went topside. We are over the highs of last week. You've done 28,000 contracts. Now, where King dollar looks to me like it wants to go take out. Actually, this is interesting. No, okay, so it's not going to. You know what's intriguing about the King dollar here, folks, is that this could have been an ABC up. and it's not an ABC up. The reason being is that what we had done, if we didn't have come down on we made the high last week at 93,260. It's been trying to get into this December 12th high for quite some time. That's 93,480. So it was only 220 ticks away from it. What we had done is that then we come off the high and we actually came down with volume. So the definition of an ABC up or an ABC down, first up would be you go up on volume, you pull back with lighter volume. Well, we didn't pull back with lighter volume. We had an expansion of volume. So that would negate the ABC up. Bottom line is that this December 12th number wants to be hit, which is the 93,480 number. If we take a look at some of the higher volume equities out here, this is what you have. You have Bank of America up 5 cents. Let's see, Symantec is up 93. NVIDIA is down $11. NVIDIA, no doubt. Let's go look at NVIDIA. NVIDIA is pretty amazing. NVIDIA lugs the NDX 100 up as well as down. And NVIDIA did it again. Bottom line, it gets back in the lower range. NVIDIA was trading last week at 260. You're at 244. The thing that's amazing is that the bottom of this range on NVIDIA is $204. So the range is a $50 range consolidation, which is about as intense as you can get. Tesla also is taking a little hit out here today. If we take a look at Tesla, what you have with Tesla right now is trading down $10. Bottom line in Tesla, though, guess what? You're coming into a swing point, dramatically lighter volume. So Tesla also is in a consolidation. The bottom of that consolidation is about 244. We're at 282, but it's coming into a swing point that has high volume at 275, and that looks like that 275 more than likely is going to hold. We take a look at some of the Dow stocks out here. Dow, you have American Express down 87. We have Honeywell off 25. Big Mac is off $1.81. You get United Technologies off 70. Disney is up 13. I believe Disney's one of the only ones inside the Dow Industrials that has any positive. Oh, Nike do. Nike and Disney. The big point movers inside the Dow out here today. United Health is putting 28 negative points. You have 3M putting 25. Caterpillar's putting 21. Boeing's putting 21. Inside the NDX 100, strength versus the weakness. Strength out here is Symantec. That was down 33%. It went up 9 yesterday. Looks like it's up 4 today. You get Western Digital is up 2%. American Airlines is up 1%. Taken away from it, Vodafone is down 4.9%. NVIDIA is down 4.4%. Celgene's down 4%. And Tesla is rounding out at 3.2%. We go take a look at Amazon. Let's go take a, well, actually, let's take a Home Depot. Home Depot come out with numbers. Numbers were a little shy. Bottom line, folks, Home Depot wants higher price. This is going to be wild watching this shake out. Home Depot, all Home Depot did, come down to 186, rejected the price. Bottom line, didn't even get near a swing point, which is amazing. You can expect good old Home Depot. It's going to be a build cause to get through its downdraft from the February 5th to February 9th area. These charts from February 5th to February 9th, once you get below them, it's going to have to basically build some cause to repair that damage that was done. Stay right there, folks. Come right back. We have the Dow Industrials down 250. NASDAQ off 78. S&P's off 28. Come right back. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow down 243. NASDAQ is off for 77. S&Ps are down 27. Let's go to our man, Al in Tampa. What's going on, brother?
Not much. Getting ready for the European vacation.
That's a good thing. I like that.
Yeah, you should actually go over there. It's pretty nice because the stock market really doesn't start till like 4:30 or 5 o'clock in the afternoon. You could have your whole afternoon and part of the day off, and wake up and then just trade at night.
Yeah, that's. I'm a morning person though, actually. So it's kind of by the nighttime I want to be grooving.
Yeah, I want to look at a couple stocks. The first one's Lumber Liquidators.
Okay. So let's take a look at. You got Lumber Liquidators. The high for the year is 41. The low's 19. You're trading $21. Okay, so what are we doing?
Well, I went ahead and I got out a little bit ago, but I made some money. I made it. I bought it for like $19.70 and got out at like $21.50.
Nice.
And I'm looking for a little bit of a pullback and maybe expecting to go higher. I didn't get the volume last Friday. Did it break the point or not?
Well, it hasn't tested that high volume swing low yet. Well, I guess it has. No, yeah, it actually did. But let's see. 6.2 million. Yeah, that's still too much volume. Okay, so it tested the high volume low of 7.1 with 6.2. You know, you want to see the test out there like with 4 million versus 7 or something.
Yeah, you understand that. Usually 3/4.
Yeah.
Of the volume.
So, and then what you have here is that then you popped, and you can see you popped up with like 700,000, 800,000, 900,000. That's saying that thing's not done going down yet. But you made money.
Okay,
that's all that really matters.
Yeah, I made some money, and I also made some money on AMD. I'm wondering what's going to happen with AMD.
So AMD.
I got that in the 9s. I think it was 975.
Yeah, that was an ABC up, right? That was an ABC up, I think. Well, let's see. No, it wasn't an ABC up. It retraced too much. But that had a big sign of strength on the 26th. Well, and you're out of AMD also, right?
No, I'm actually I'm expecting it to go to like 1270.
Okay.
But I've got a close stop on it. I've got it within. I got a trailing stop at 50 cents.
Okay, that's good. You know, AMD is running out of strength here. I mean, you know, this is a you know, $9 to $12.50 is not bad.
Well, you got that gap too. I wanted to ask you about gaps too. You've got that gap at like 10.50.
That's right. That'll get filled. And 10.09 actually.
Yeah, I'm wondering about gaps. A lot of gaps happen in after hours. You'll see the buying come in. Do you count those when it gaps up, when it goes up? The gap happens in after hours and then opens up from there. Is that a true gap?
No.
Or is it a...
No. So that's a great question. Okay, so the question is that you look for a gap before the market opens or after the market closes, and I don't use them. When the market opens, right, then those gaps, and those are the only gaps. Like intraday, folks, you can take a look at your platform, whatever platform you're on, and you can see what they're doing overnight, intraday, and all that, and you'll see it. But the ones that you want to pay attention to are when the market's open, because that's when the most amount of trading is taking place. And something to always remember.
Lower volume in that. What do you do?
Well, we want to remember this first about gaps.
Up on real low volume, and then it'll pull back, but it doesn't actually close the gap.
The gaps. When you have, let's picture this.
Sorry.
That's all right. So let's talk about gaps. When you have a gap down in the marketplace, right? Those gaps never have to get filled, and I could show you hundreds of them that never have got filled because the stocks go out of business. Now, what ends up happening is that a gap up, okay, bottom line, most times will get filled, and sometimes it'll take a couple of years. But when you get a larger correction, you want to be really paying attention to where your gaps are, because when the market turns, they like to head for those gaps on the way down. And
that was like lumber liquidators. I got caught back giving 50% of that because I didn't pay attention to the gap. You remember that huge gap? I made like $10, and
yes.
One day on 3,000 shares, I was $30,000 up.
Right.
I ended up giving about 12 or 15 of it back.
Right. Right.
Because it was close to, all the news was good, and you know what I'm saying, and I was expecting it to go back up, and it went ahead and filled the gap. They were lying about the news.
You know what the cool thing there, Al, is that, you know, yesterday's gone, and that is gone, which is really cool, because I suspect when that happens a couple times to you, you will not get in equities that have large gaps, particularly when they're like close within a month or 2 months. If you're getting in a stock, folks, that has a large gap, and let's say it's only 30 to 60 days ago, it's very dangerous. It just, you know, you can...
Well, I made the money in a gap, so I kept on being too loyal to it instead of watching what it was. It pulled back, and then I got caught. And
right.
I won't have. You said to watch it. I made it the first time when I hadn't gapped up to 30 from 20 something, and from 22, and then I got out of it when they did the correction. The second time when I made the extra money, I didn't pay attention. But I got out and I still made good money.
Good.
But I gave too much of it back.
It's life in the city, man.
But it happens.
Yeah, it happens. Totally.
It was like funny money, but it was real money.
Yeah, it's real money. That's right. That's right, man.
But I'm learning. I haven't had many of those happen. You know what I'm saying? I've had to work every day, and I've made some good money some weeks in that, and kept my losses small. But when you get the huge gain and stuff like that, I was going to take the money off the table, and I should have. And I was going to pay half my mortgage off that I owed, so I ended up taking this vacation instead.
Well, so, that's all right.
I was wondering about those gaps. You know, I know gap downs won't be filled, but gap ups will come back on, especially if the market's in turmoil. I was just concerned. I'd never heard about, the after hours and that. How did you rate those? So
Yeah.
I know how to look at those now, because I don't think it's in any of your books that I've read.
No.
It's never talked about.
Yeah, it isn't. It isn't.
So maybe in the future, that you might have a little chapter on that, and I'll remember it.
That's a beautiful thing. Cooking, brother.
Thank you very much, Tom, for your help.
Have a great one, man. Have a safe one. Let's go to Garo in Newport Beach. Garo, what's going on, brother?
How are you, sir?
Doing great, man. Yourself?
Thank you for asking. Regarding Schwab, is this running out of power? Is it time to getting to a swing point, or still there's room to go higher?
Okay, stay right there. We got a short break. We're going to be coming back with Garo, and we're going to be hanging in Newport Beach. It's a beautiful thing. We're talking about Schwab. Dow right now is down 262. Nasdaq's off 83. S&Ps are off 30. Come right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Are you an options trader that's looking for that extra edge when placing trades? David White will be hosting a webinar on May 16th, which is the Wednesday leading up to Options Expiration Friday in May, where he'll discuss in depth the methodology he uses for trading options near expiration, including swing trading setups and expiration day trading scenarios. Subscribers to each of Dave's newsletters, Path of Least Resistance and the Technology Insider, gain access to this 60-minute webinar, which will be archived if you cannot attend live. Dave has had some great option trades recently for his subscribers. See for yourself the trading methodology he uses when trading options by signing up today for either of his newsletters, and we'll see you Wednesday, May 16th at 5 p.m. for option trading near expiration, analyzing swing trades and expiration day scenarios. For all the details and to sign up today, visit the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow right now down 260. Nasdaq's off 81. S&Ps are down 29. We're talking to Gyro, and we're talking about Schwab, SCHW. Yeah. So the low for the year in Schwab is 37. The high is 59. We're laying right there. The high was established on the May 11th. They next time they come out with the numbers is on July 16th. So let's bring this back and see what we got here. Okay, so there's no doubt it's been quite a run. 2016, it's at $24, so you're at 58. you're pushing into the last high, so 36 million versus 31. That's on a weekly. We put this on a monthly. So on a monthly, 149 million, 150 million. Oh, that's pretty cool. Okay. Well, it's going to be a close call. What you have is this. So you've had volume that starts dying on the vine, you know, from this $40 level, which was like about 2 years ago. But that being said, Gara, what you did is this, is that you actually took out the swing point of a small ABC up the month of March. So that would give you 38, 18 bucks, 48, 58, 68. Interesting. That gives you a $66 price point. So, I mean, if you're in this, the way to do this is just do a trailing stop on a continual basis, you know. And another way you could do this is if, depending what you're in it at, you could put a stop. I wouldn't let this go back inside the $56.25 level, because if it does, then you're definitely in the lower range. You know, it busted out of that range May 7th, and if it got inside that 56, then you have game down to that 48. That'd be, and that's what some of these equities have done. You know, if you look at NVIDIA, that's what NVIDIA just did. NVIDIA got outside for 3 days, comes back inside, and that's when they come back inside. And this is a high volume low that's laying out there. That's when it gets dangerous.
Yes, yes. Very good. Thank you, sir. Thank you for your time. I appreciate it.
Okay, man. Have a great one. Have a safe one. So if we go over to NVIDIA for a second, NVDA, and these consolidations, when you get these big consolidations, folks, it's particularly in NVIDIA's space, it's not only just the big consolidation. What you also have is that high volume low is laying out there. So NVIDIA had broken out of the consolidation it was in. It broke out last Wednesday, got above the price point of 251, traded up to 260. And then what NVIDIA did is this. It came off the high, so it made a high with 24 million. Came off the high with 30. Got back inside the range. Now what that sets up is like, okay, man, now you're going to try to get down to the bottom of the consolidation, which is 205. And NVIDIA is the type of stock, the hard comprehension in a few of these, NVIDIA would be one of them, is that how the heck can a stock consolidate between 254 and 210 or 200? That's like pretty amazing, folks. That's a 20 to 25%, 22% consolidation. And that's been in that consolidation now since January 1st. And it got back inside it today. So there's no reason that NVIDIA is not going to run down to the other side of that whole deal. If we go over to the SMHs and we just take a look at the SMHs, what you're going to see is that the SMHs never got to a high when, you know, bottom line is that, you know, you had a few of these equities that were up there. What the SMHs did, they tested the swing point of the 17th of April yesterday, couldn't handle it. You know, now the SMHs are pulling back with really light volume. So the SMHs are telling me that it's not done yet going up. That's kind of how that shakes out, which is pretty wild. And, you know, the VIX out here today, I believe it just went over the 15 mark. No, 1490. We had 1490. What you are going to hear a lot about out here, here, watch, I'll bring this up. This is what you're going to hear a lot about, is that you're going to hear, this is the first time, let's see if I can get this up right now. So if I take a look at the S&P, the SPY, I believe what's happening is that this is going to be the first time that if you take a look at the dividend yield inside the S&P versus the 3-month bill, the 3-month bill is actually, I'll bring this up, this is the first time since 2008 that cash is actually worth more than, oh, I don't have the 3-month bill. 1 second, let's see. Cash is actually worth more than the dividend of the S&P, and that's been a long period of time. You know, and what that has to do with, of course, is that has to do with short-term rates, bank-to-bank rates, and you know, today bottom line is showing that guess what? They did break the B point. They're broken with volume. In fact, let me go look at the 30-year continuous contract, because the 30-year is an ABC structure down with a price projection of 139.04. So if we take this back, I'm going to take this back like 20 years to see where we're at. Well, it's not the end of the world. I see that. So the 30 has been a lot lower. Even, you know, this is pretty amazing, actually, because 2014, the 30-year was trading down to 127. Right now, you're at 141. And it's going to be hard to break down. Let's see. So 139.04 is your price projection, and that's not the end of the world. 139.04 is basically in the middle of the range. Well, the bottom of this range is 127. 127.23. 10-year, different ball game. Now let's bring up the 10-year. TY1. Treasury continuous. Let's see if I get that. Nope. TY1. Okay, good. Here we go. So I'll put the 10-year up. Same type of long-term chart to see where we are. Okay, so in the 10-year, you're at 118.21. Your swing points down here approximately 117.29, 117.22, and your price projection here is the same. So there's quite a bit of support. Let me tell you this. There's a lot of support at this level. We traded at this level going back, let's see, 2003. Then we traded a lot lower going all the way until 2008. 2008, there's a huge amount of support going all the way over to 2011. So that ain't just, I don't think that's going to just break. Oh, and then this is cool. Here, let's do this. I think this is a larger ABC down. Let me see what we have here. This is pretty cool. So if I take this, I'm taking the high of June of 2016, which is 134.07. Now remember 134.07. This 32 ticks. 134.07. There's 32 ticks, folks, in a point. To 120. Oh, good. 123 even. So we get an 11-point A to B minus 128. Yeah, see, we're almost there. This is pretty cool. The 117.16, folks, is a much larger ABC down that started in June of 2016.
Many of our listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
Are you an options trader that's looking for that extra edge when placing trades? David White will be hosting a webinar on May 16th, which is the Wednesday leading up to Options Expiration Friday in May, where he'll discuss in depth the methodology he uses for trading options near expiration, including swing trading setups and expiration day trading scenarios. Subscribers to each of Dave's newsletters, Path of Least Resistance and the Technology Insider, gain access to this 60-minute webinar, which will be archived if you cannot attend live. Dave has had some great option trades recently for his subscribers. See for yourself the trading methodology he uses when trading options by signing up today for either of his newsletters, and we'll see you Wednesday, May 16th at 5 p.m. for option trading near expiration, analyzing swing trades and expiration day scenarios. For all the details and to sign up today, visit the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow right now down 253. You get the Nasdaq off 76. S&P's off 27. Let's go take a look at some of the larger funds and what they're doing. So tonight, folks, you're going to hear lots of numbers coming across on all the financial news about where the funds are going, because everyone had to get these filed by today. And what that is, that 13F filings, they have to be filed within 45 days after the close of the quarter. The close of the quarter we're talking about is the first quarter, which is the end of March. So let's go over and first start with the GLD. So what this tells you is that it tells you where the large funds are buying and or selling. That being said, it doesn't mean they still own them, because this is as of the 31st of March in this particular case. So if we look at the GLD first as to who's coming in, what you can do is this. You can get a kind of a scope on, is there more buying or is there more selling, though? When you look at these, basically quarter after quarter. So if we take a look at the GLD first, what you're going to see inside the GLD, we had some good buyers. Morgan Stanley doubled their position. They went from 5 million shares to 10.2 million shares. Barclays came in the position with a new position, 3.4 million shares. Commercial Bank doubled their position. Bank of America added another 900,000. They own 2.8% now. Now, if we just go, I'm going to go from there, and I'm going to say, okay, now who came out? BlackRock, now that's an ETF. BlackRock sold 3 million out of the 13. Bank of Montreal almost closed all their whole position, actually. They only have 400,000 left. So when you take a look at this, it's not the end of it's the GLD would be saying, okay, there's more buying than selling. Let's go over to Rheingold Resources. So Rheingold is an equity that has really got hit in a big way. Now, Rheingold has, for a long period of time, Fidelity is always one of their biggest owners. Now, the deal with Fidelity goes like this. It's great when they're buying, and it's a disaster when they're selling. So Fidelity out here, well, here, first the buys. The buys that came in here, you had Van Eck come in. That's going to be an ETF, okay? So when you look at this, I really don't pay as much attention to ETFs because they come in and out every day, and they get a file at the end of the quarter anyway. CI Investments, they come in pretty good. Now, so you can see the buy side there is 850,000, 323, 297. The sell side, bottom line, as soon as we look at it, who's the first one? Fidelity, 683,000. They had still owned 2.8 million as of the 31st. This is a huge problem. Now, Fidelity is one of the biggest traders inside the gold market. You know, bottom line is that you think of Fidelity as a funds, they don't trade. Guess what? They trade, and they trade in a huge amount of way. They're basically, you know, when you look at some of these filings, and this has been going on forever, they go in and out of equities like nothing. So in that case, Gold Corp, you can see why Gold Corp's having problems. If we go over to, Rango Resources. If we go over to Gold Corp and we take a look at Gold Corp, see what's happening with Gold Corp. Inside Gold Corp, the buyers out here, you get some decent buyers. You get Santander Banco, that's a new buy. They bought 12.6 million shares. Now they own 1.6% of it. That's a big number. You have Ruffer. That came in, new buy, 5.9 million. They own 8 now. Franklin Resources, that's Franklin and Capital. Franklin Resources is new. Capital's not. So now let's go to the sell side. And the sell side is more spread out. But when you do look at it for buys versus sells, Gold Corp is in pretty good shape. You know, you got Carmonica came out with 4.4 million shares. BlackRock sold 3 million. Let's do a couple more. Let's do Anico Eagle. No, we'll have to do Facebook too, just to see where that's at, because the fangs will show up quite a bit too. Anico Eagle, the buys inside of Anico Eagle, BlackRock was in there. Van Eck, CI Investments, Sun Valley. This is a guy you want to watch. Sun Valley Gold, 660,000. That's a new position he has in there. Selling, yeah, you can see the selling in AEM is dramatically lighter than the buying. Let's go into Facebook and see who HDC, because this will be interesting with Facebook, because what it did have is that I believe, let me look at this simultaneously, when Facebook came for that downdraft. FB. Okay, so the downdraft. Oh, this is good. So the downdraft, okay, this is cool. The downdraft started on March 16th. It hit a low on March 26th. So these numbers here that I'm going to give you at Facebook are going to make a difference, because bottom line is that this is when Facebook did take the hit. Okay, so now buyers. Okay, so you had T. Rowe Price going with another 10 million. They own 3%. Viking Global came in. They doubled their position. Susquehanna doubled their position. Fundsmith came in with a new position, 5 million shares. Norges Bank came with 25%. Okay, now let's see the sells. Ooh, there's lots of sells. Not as big, but there's lots of sells. You had, well, actually, hold on, I got to get the 18th. Yeah, there's lots. You got Jensen sold 3.7 million. JP Morgan 3 million. Jackson Square got out totally. Sands Capital. It's kind of a toss-up in there. It's kind of a toss-up. So that's Facebook. Let's go to Amazon. Let's see who is moving into Amazon. So Amazon. The buyers, and imagine when we go through Amazon, this is going to be like pretty intense, because you're buying a stock that is 15 to 1600. Susquehanna came in, bought another 650,000 shares. They doubled their position. Renaissance Technologies, now that's a new one. Now Renaissance Technology, folks, see this one here, this is really important. Renaissance Technology is the most successful fund in the world. This is basically the first guy that was basically ever using artificial intelligence in the whole ball of wax. He came in big. That's pretty amazing, actually. But there it is. They come in with a new position, 500,000. Norges Bank, no, not Norges, let's see. Wellington Management came in. They put another 20% to work. Okay, let's see the sellers. They had a couple big sellers. T. Rowe Price sold 1.7 million shares. You had State Street sell 770,000. Goldman sold, oh, this is interesting. Goldman sold 734,000 yesterday. Hold it. Is this today? What day is today? Say the 15th? Yeah, and Goldman sold, oh, this is intriguing. Look at this. Goldman sold 734,000 shares in the last couple of days. They have 3.1 million left. Now, what happens with Goldman, evidently, I don't know why they have to, basically, they don't own 5%. Yeah, you get Fidelity. Fidelity's selling too. Stay right there, folks. We'll come right back. We have the Dow Industrials right now trading down 230. Nasdaq's off 66. S&Ps are off 24. We'll come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Let's go take a look at the volumes out here as we're coming into the close. We're at the 508 million on the NYSE. We take a look at the NASDAQ. NASDAQ right now is at 1.8. And you know what? They're going to have to throw quite a bit of volume into this close to not have this market pop higher once again probably tomorrow. This is going to be intriguing watching this whole thing shake out. So if we take a look at the composite, you had a low out here, 73.20. You're at 73.44. Bottom line is that you're coming into February, the 9th of May, and the 9th of May, volume-wise, was 2.2 billion. And we're not going to do 2.2 billion. They're not going to put 400 million into the into the NASDAQ composite in the next 6 minutes. The difference, this is what ends up happening, folks, is that as you get close to 4 o'clock, in the composite, your numbers get really close, meaning that we're 1.8 right now. You get 4 minutes, then throw it in. This is what the difference is. In the NYSE, they can basically roll that in until 10 past 4. I believe it's 10 past. It might be quarter past. And this is what the difference is. We can see we're at 512 million. Bottom line is that that'll end up being 700 and something million coming into that close. If we go take a look at the SPY, you do the correlation inside the SPY, what you're going to see with the SPY, you're back with 66 million shares, you're going into 72, you're coming into 99, bottom line. And what you have here is this also. So picture, you have a high volume low in the SPY. So the SPY eventually is going to get out of 252. That being said, we went up with light volume, but you got over a couple high volume low days. So what happens is that as you pull back, the highs of those high volume low days end up being support. Because what ends up happening is that you have all the sellers coming down. Now what's going to happen is that you get to bust into those levels, and you get to bust into those levels with higher volume, or guess what? That's the end of the selling. Stay right there, folks. We're going to be coming back with lots of numbers after the close. We had the Dow Industrials finished down 231. NASDAQ off 66. S&P's off 24. Gold down 26 bucks. Silver off 37 cents. Notes and bonds down 18 ticks and 1.5 points. King dollar up 648. We'll come right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful thing. Got our man, Tim from Minneapolis. We're going to take it by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But
yeah.
Holy I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Let's take a look at one of our 4 agreements. Transform your life. When you refuse to take things personally, you avoid many upsets in your life. The feelings of anger, jealousy, and even sadness will simply disappear if you don't take them personally. A little harder than it says. Market-wise, let's take a look at it out here. We have the Dow Industrials down 193, NASDAQ off 59, S&P's off 20. We did get volume inside the NYSE, folks. Not inside the NASDAQ composite, but volume came in, did 800 million inside the NYSE. Composite only 2 billion, so composite still wants to bounce out here. Gold contract got slammed as the dollar went higher. Gold contract down $26, trading at $12.92. Silver was down 37 cents. Percentage-wise out here, what you had the silver contract come down 2%. You had the gold contract come down, where is she? But they're both approximately 2%. Silver was down 2.1, gold was down 1.98. Oil hung in price, up 19 cents, $71.15 a barrel. Notes and bonds, they also came down hard. You had the 10-year note down 17 ticks, 118.22. 30-year bond down a point and a half, 141.11. If we get open, we take a look at the 10-year first. What you're going to see is this. 10-year, we did 2.3 million contracts. You broke the B point, had the volume on the move as you broke it. That sets up a 117.5. And so that's bottom line is that you got about 22, 32, 37 ticks down to finish out that ABC structure. 30-year also did an ABC structure on the way down. 30-year took out the swing low that was established out here February 21st. 30-year did 415,000. That was taking out the B point of 41.17, and that's going to set up a 139.04 number. The intriguing thing about the 30-year, both the 30 and the 10, let me bring this up for you because this is really cool. Have understanding the 10, because the 10-year is the number, folks, that most of us really want to pay the most attention to. The reason being is that if you do own a house and you get a mortgage, those basically those mortgage rates are taking off the 10-year rate. That's how this works. Now check this out because this is pretty cool. If I bring this back, I'm going to put this on a continuous contract, what you're going to see is that, put this on a monthly, is that you're going to see that the 10-year has been in an ABC structure on the way down. Well, your price projection in this 10-year, so the A point out here was established July of 2016. That comes down to 123. Your C point out here is 128. Well, that comes down to 117 and like 0.16. Now that's pretty cool because what happens is this: is that down at those levels you have plenty of support, but what you also have, that is a very large ABC structure down that started 2 years ago. How's that? 2 years ago, July. So your probability is very good that that structure will finish off, and then guess what? When you do a 2-year ABC structure on the way down or on the way up, you do something other than the same way that you were going because you filled the price projection. So it's going to be cool watching how this whole thing shakes out. King dollar. King dollar basically went topside once again. King dollar was going after that December 2017 high. We did 29,000 contracts. That was going into 27,000. King dollar was wide open to hit the 93,480 mark. What's going to be intriguing out here is that, yes, the notes and bond market have got hit and have got hit big, but what we just got coming across the tape also is that the Chinese just continue to buy our bonds. Bottom line, this is the highest level. The numbers just came out. It's the highest level in the past 6 months. So they're buying all the way down, too. Bottom line is that they've been making money on our bonds for years, and guess what? They still are willing to buy the bonds and buy them in a big way. Let's go over and take a look at, we got BECN. You got Beacon. This is a roofing company, Beacon Roofing. The low for the year is $39. Well, it's been trading at the low. The high is $66. It's trading $40. It closed at $40. That equity is trading $40 right now. And let's see. Yeah, bottom line, that's been, yeah, that got toasted a couple days ago. And, you know, we were talking about this morning, Tommy and I, on the Home Depot deal. Now, Home Depot come out with numbers, but Home Depot, bottom line, did not get smoked. Beacon, and this would totally make sense because I know how many roofs I've put on houses, and it's a lot. Bottom line is that, picture something, folks. You have the crash of 2007. Let's say by 2010, people are buying houses again. They're doing them over. All these houses needed roofs. Every single house, bottom line, if you're in this business, needed a roof. Well, guess what? All of those houses are already done. That would totally make sense that when you take a look at this, what you have here, watch this when we put this up. And there's a lot of money in the roofing business. But the bottom line is that this baby topped out in 2018. Because I suspect most of their money was made not by building new houses. What you have is that new houses basically, there's still not a lot of them being built compared to what has been built in the past. The amount of houses that were not taken care of that got built, guess what? That part, I suspect, in the whole country, the bulk of that is already done. So you can expect anyone that has been supplying that bulk would pull back, because that's where you get the double banger. The double banger being you get people doing over the houses, people, all the big funds buying them, all of the above. That's how that baby shakes out. Some of the higher volume stocks in this marketplace out here, when we take a look at it, you have Advanced Micro is up 22 cents today. You had NVIDIA down $9.80. Microsoft was off 71. If we do take a look at the NVIDIA space, NVIDIA, bottom line, broke into its lower range again. It's going to be dangerous in NVIDIA, down $9.80. You're off the high of 260 or 245. And NVIDIA is in like a 20% consolidation. It's a monster, folks. Stay right there. We'll get our man, Mr. Andy Heck, come back with us, growling a problem with us. Dow closed down 191, NASDAQ off 59, S&P's off 22. Come right back. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow Industrials finished down 193, NASDAQ off 59, S&P's off 21. Let's go over to our man, Mr. Andy Heck, as we do each and every Tuesday and Thursday. And don't forget, our man, Mr. Andy Heck, has an outstanding show every Tuesday and Thursday. 5 to 6 Eastern Standard Time. You can get that program, of course, right at TFNN. And an easy way to get all the programming at TFNN, folks, just go right to YouTube. If you go to YouTube, you put TFNN in the search bar, do it on your phone, hit subscribe. It's free. All the programs right up. Great digital content, phenomenal video, all of the above. Andy also has 2 great newsletters. He has the Technomental Commodity Report. That is his weekly newsletter. He has the Daily Essentials. That is his daily newsletter. You can take a look at both of them. Test drive in 30 days, money back guarantee. Andy Heck, what's going on?
Hello, Tom. How are you?
Doing great, man. Yourself?
I'm doing good, doing good. So if you strip precious metals out of the commodities world,
okay,
you wouldn't know that the dollar made a new high today, or that bonds, bond yields are skyrocketing.
Well, that's good.
I mean, oil. Hey, oil made a new high today.
Yeah, no, I understand that.
I'm looking at the others. I'm looking at lumber. That thing got a
lumber is a new high. Yeah, lumber went limit up, right?
Yeah. Lumber has been ridiculous. I mean, if you look at a chart of that thing has been, that thing's triple what it was in September 2015. Sugar was up today. I mean, the rest of them were, even the grains came back a little bit. So the bottom line here is that, the gold, the silver, the platinum, the palladium, hey, they looked at that dollar, the new high in the dollar. They looked more so at the 10-year Treasury. Right. At a 306 yield, and they ran, and boom, gold gave it up. Gold dropped below, $1,300. I heard what you said in the last segment about the technical levels for gold, but if you look back at a long-term chart, with the exception of 2016. This has been a seasonally weak period between May and July for gold. Now, it wasn't in 2016 because of the Brexit thing. But if you look back, a little bit, since gold made that low in 2015, we've tended to go down this time of year and then recover. And every, period of weakness has resulted in a higher low. We got a hold on the continuous contract chart, 1236.50. If we don't make a lower low than that, it might be, we might be, in a zone where it's a buying opportunity for the yellow metal. The bottom line is, Tom, the only time to buy this thing is when it looks lousy, and the time to sell it is when it looks its best.
Yeah, no, there's no doubt. Listen, we'll see where it shakes out.
We'll see where it shakes out. I mean, I still am friendly to it. I still see lots of reasons. I mean, from geopolitical messes to inflation to all kinds of things. Bonds are going up, partially because of the inflation. So, I see lots of reasons why gold can do well later in the year. But right now, we're in a downdraft. We're in a short-term downtrend. And, the interesting thing is it didn't take silver with it today.
No, I know.
Silver went down, but it didn't go below $16, which is kind of interesting on a $26 down day.
Yeah. Now, folks, if you take a look at, I got a chart up here, Andy. Al, if you could just put that up for a second. So, and this is going to get intriguing. And what it is this. This is a monthly chart, and you get a continuous contract. And now, like, I got this ABC down approximately 1270, let's say, okay? Now, what's going to be intriguing is that it's going to meet this trend line coming all the way up that has held pretty good since the lows that were established in November of 2015. Now, that trend line is laying out at 1288. So it's going to be cool, folks, watching how this shakes out, because this is the theory behind, like, a trend line like this. Now, you can break it, but if you break it without conviction, that doesn't mean a thing, because you can go right back topside. Now, if we break it with conviction, then that's problematic, because then you're talking like 1123, and you could even make the case down to 1044. So I'm just bringing that up because...
Hey, listen, look at the low today, 1288.20.
Oh, that's funny. Wow.
Yeah. So... Yeah. We shall see. I mean, it's, rocky markets, no question about it.
Hey, the bottom, what's intriguing about the metal market right now is that they still didn't hit the commodities. I mean, the equities. If you look at the GDX, what you're going to see is that you had an expansion of volume, you come into the swing point, but you didn't hit the swing. Now, what happens, folks, is this. If you don't hit swing points, and like this, you're coming down hard and you don't get to the swing point, that's bullish. That's the bottom line. You know,
I've been thinking about that GDX, and the low of the year. You know, I was looking at that earlier.
Yeah.
It's interesting you mentioned that, and I'm looking at that, and I'm seeing this February 9th low sticking out there. But that also was the low of the day when the stock market really got smacked.
And it absolutely was. And now, and what happens there? Now, this is what's cool. That isn't a high volume low, because that was going into, believe it or not, a strength from the last low in December of 2016. We did 404 million, and you only did 326. Isn't that cool?
Right. Right. That's cool. The other thing that bothers me a little bit about gold stocks here is that, you know, with the oil price, you know, on the highs, it's going to cost more to extract the price of gold. That's going to eat into their profit margins. Yeah. So if the price of gold's going down and the cost of production's going up, you know, that's kind of a toxic bearish cocktail for a producer.
That would be bad for the next quarter, for the quarter we're in, no doubt.
On both fronts. So look, a lot of action ahead, no question about it. You can't make, you know, big sweeping long-term statements on one day's price action. I still go back to the fact, Tom, that 3.06% on a 10-year Treasury. In my lifetime, that is a low rate.
Yeah, but that being said, it's a lot higher than it's been. I'm with you. I understand that.
No, I mean, yeah, but the rates that have been there are ridiculous.
Oh, yeah, that's right.
They're ridiculous.
The cool thing is, so when I brought this up early, Andy, so the ABC structure down in the 10-year that started 2 years ago has a price projection of approximately 117.5.
Okay.
Now, the cool thing is we're at 118. And
on the euro.
Yeah, and what happens is that when you have a 2-year ABC structure on the way down, folks, or on the way up, okay, you know, bottom line is that most times you're going to do something else other than the same type of trend. It's just that's been going on for so long, that's what happens. Now, the cool thing is you have two different aspects here. It's coming into the price projection, but then you're also coming into a huge amount of support that was because this 10-year traded from 2008 all the way over to 2011 at these numbers, approximately. Do you know what I mean? 117, 118.
Right. Okay, so you're talking the
10-year.
The 10-year. Gotcha. Because I thought that, you know, it's funny. The euro's at the same price, and I was gonna add something about the euro, which all filters into this on the from the fundamentals.
Yes.
Because, you know, the higher rates are supporting the dollar and causing the dollar index to rally. So, you know, the gold is looking at both the higher rates and the higher dollar, which is pretty bearish for the two. But I'm thinking this here. I'm thinking
Hold that thought.
Sure.
Andy and I are coming right back, folks. Dow Industrials finished down 193. NASDAQ off 59. S&P's off 22. Andy and I are going to be coming right back, folks. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Talking with our man, Mr. Andy Hecht. We are talking commodities, we're talking markets, and of course, don't forget, Andy has a great show right here every Tuesday, Thursday, 5 to 6 Eastern Standard Time. You can get it right at TFNN. You also get it right at YouTube. Okay.
So to continue on with our discussion, you know, I've been thinking that the euro against the dollar, the euro got very strong, right?
Yes.
It got up to like 124 and change.
Yep.
And, you know, I think that the economic growth, the ECB was afraid of pivoting from accommodation to tightening because of, excuse me, because of the strength in the euro. Now that the euro's come down, they might have room to raise rates.
Yeah, no, I can see that.
And that could stop the trajectory of the dollar.
Yeah, no, that's the euro is 60% of the dollar index, inside the dollar index. So there's no doubt about that. Yeah.
I think this is a golden opportunity for Mario Draghi to finally raise rates. They don't belong at negative 40 basis points in Europe, and I think that now that the euro is down, you know, over 6 big figures from the highs, this is probably a good time. They have some cushion. That's just my thought.
Yeah, no, listen, it's
and that would come as a surprise to the market.
What it seems is that the market that we're going to be in now is going to be basically you know, interest rate currency market. That's going to move
exactly.
That's going to move equities around, folks. That's, you know, because if you think this through, in both cases, you know, bottom line, they both mean what an equity can bring to the bottom line. If the interest rates go higher, companies will make less money. If interest rates go higher, they compete with equities. You can see that, you know, it's going to be over. It's going to be over the news all over the place tonight that this is the first time that the 2-year note basically is higher than the dividend from the S&P since 2008. So that means that cash is basically competitive now. So, you know.
Capital will flow. Capital will flow from equities to fixed income securities. The higher these things go. That's just the way the markets go.
No, totally. Hey, you know what's cool?
Hey,
so check this out. I just got these numbers too, and we'll get the. I think we'll get the oil numbers too. We'll get the oil numbers, but bond numbers, folks. Okay, the Chinese are not stopping buying our bonds. They're 1.19 trillion. The numbers just come out. Japanese moved back a little. They're at 1.04 trillion, but the Chinese, that's the largest number. 1.19 trillion in 6 months. So they discontinued to buy all the way down. So that's going to be really intriguing.
Of course, because where else are they going to put their money?
Oh
That's
no!
a
So
safe.
listen, they've made a fortune. If you look at bonds,
Right.
folks, I don't even want to think how many hundreds of billions of dollars they made.
Oh,
no,
big
anyone.
time.
No, hey, listen, thank God that someone's buying them.
Right, exactly. Someone's got to buy
Yeah,
them, no question.
totally.
All right, so we got oil figures.
Yeah, oil figures. Okay, but let me see what we got here.
Yeah. And then one more topic I wanted to cover.
Okay, so let's see what we
After
got.
After
Oil,
the APIs.
Oil, where are you? Here, oil. So, okay, there we go. There, okay, API said report U.S. crude stocks rose 4.85 million. These guys are always so late, man. So it's 3 past, and I only got the first number yet. So it's going to be a few more minutes.
I'm sure it'll be coming. I'm sure it'll be coming out soon. So we got a lot of volatility ahead of us in markets. But I want to send special white light out to your Tampa Bay Lightning tonight because they got to win. They got to win in Washington tonight.
Yeah,
Tom.
they're going to need more than white light, man. They need a couple of brutes, and they. You know, I love that team, but they got to get faster. The Capitals are just so good, man.
The Capitals are on a mission. I mean, those 2 games were shocking, actually.
They were, man, you talk about fast hockey, brutal hockey. You know what's so cool, folks? No, I didn't. What was so cool is that as you're watching it, they're not only fast, but they just kept throwing that puck in there, making things happen, man. They just, I mean, boom, boom, boom.
We got lucky. We got to talk. We tied up our series last night.
Oh, good.
We tied ours up. We didn't look good the first game, but we won on the road last night, which was good.
That's huge, man.
It's huge. Coming back to Vegas and expansion team. I'm telling you, if they make the finals, it'll be a shocking.
Oh, it'll be great. It'll be great. I hope you guys do. I hope it's us and you. That'll be great. Yeah. I'll tell you though, those Capitals, man. That captain of the Capitals, man.
Yeah, Ovechkin.
He's unbelievable, man.
He's great.
He is.
I think he's the best player in the NHL.
Is he?
Yeah, I think he is. He's amazing. He just kind of hangs there to the side of the net, and he just, when the puck comes to him, he puts it in.
Exactly.
He finds holes, you know?
Exactly, man.
I love hockey.
No, listen, this is, I think I'm prejudiced to hockey anyway, but this seems like even a more tremendous Stanley Cup this year because it seems like so many teams are so good, you know?
You know what? They're getting faster and bigger.
Yeah, they are. Oh, I know. 6'4". Give me a freaking break.
There's 2 guys on Winnipeg who was 6'5".
Yeah.
I mean, that's big, and they skate so fast. It's such a fast. You know, I like football and I like baseball and basketball, but there is nothing like the speed in hockey.
Yeah, no. And you know what is amazing? It's hard to comprehend that they can do so many tip-ins and they're so accurate.
Oh, I mean, they practice, man. They practice that. They work that.
No, Dave, no doubt, man. Holy cow.
It'll be interesting. I'm looking forward to the game tonight. I'm really hoping that that Tampa wins. Anyway, so did gas come out yet?
Let's see. The rest of these oil numbers. Let me see. Where are okay, so
it's going to be interesting to see.
Here we go. Okay, now we got them. Okay, so we had stockpiles increased 4.85 million barrels. Cushing was a plus 62,000 barrels. Gasoline was minus 3.37 million barrels. Distilled was minus 768,000 barrels. That's probably bullish.
Not that bearish.
No, yeah, it's probably bullish, right?
768,000 barrels on the distillates. Yeah, it's kind of close. I mean, it's, you know what? It's really. I would say that this week is really neither. It's kind of neutral, but neutral with the price, trading up to 71.92 today. With the dollar exploding, with the bonds coming down,
it's positive, yeah.
Bottom line is it's inflationary.
You know, it's weird. I mean, for some reason, folks, well, not for some reason, the people are buying it. That oil wants to go to $75, man. And if
Hey, by the way, did you see Brent? Brent traded just below $80 today.
Okay.
79.45. That Brent spread went up to $8.06 on the July.
Yeah.
And that's telling us that there's problems in the Middle East.
Yeah. And, if we
and there are.
And watch, we go to gasoline. Now, this gasoline, unleaded gas, folks, This is a sad story. This is telling us that we can go to basically $3. We're at $2.20. $2.18 was the number. Once it broke $2.18, it's like, you're going to be kidding me, man.
That's $4 at the pump.
That's intense.
It's already, by the way, in California, it's already $4.20 at the pump.
I think everyone's turning us off, Andy. They don't want to hear that.
I know. Well,
I'm not kidding about the gas, folks. None of us can stand that. But guess what? That $2.18 was a big number. We broke it, and it's like, okay, man, there's nothing. And it's because we went down so fast in 2014, folks.
If there is inflation, watch out. Gold ain't going that much lower.
Okay. Listen, man, we look forward to the show in a half hour. Appreciate it.
Thanks, Tom.
Thanks. Stay right there, folks. We'll come right back. And, of course, our man, Mr. Andy Heck's going to be coming up with you actually in 20 minutes. Come right back, folks.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Let's get over and we'll take a look at the XLE inside the energy sector. Bottom line, XLE out here today, it was getting a little weak. It's in a confirmed ABC structure on the way up with the price projection up here at the 78 level. And what the XLE did today, guess what? You backed down, you had lighter volume, you backed into its strength, rejected lower price. So XLE also wants higher price. That thing wants to get up to that swing point of 78.39. If we look inside that sector, you go to the ExxonMobil first. ExxonMobil is one of the weakest. Now, ExxonMobil is 22% of the XLE. That being said, guess what? This is kind of showing how the other equities inside the XLE are so strong. Because what you have is that Exxon is weak, and it's 22% of the XLE, but bottom line, Exxon also went sideways today. Bottom line, that also looks like it wants higher price. If we look at Chevron, Chevron is the second largest weighting inside the XLE. That's a weighting of 17%. Chevron backed down, rejected lower price. Chevron is also an ABC structure up. This wants to get into this 133 level. Andy Hecht, you know, he's talked about Valero a few times because that's where the crack spreads are all about. Well, Valero is at all-time highs. I mean, when you take a look at Valero, this has been a one-way trade. When you go back to Valero, April 4th, it was at $89. You know, so you're at 115. That has some real power behind it in a big way. Let's go Schlumberger, SLB. Schlumberger right now, that's weak. Not as weak as ExxonMobil, but it's weak. You know, bottom line, you're pushing. Yeah, you're pushing with volume, but that's having a hard time getting through the February 5th level out here. Halliburton. Let's go take a look at Halliburton. So Schlumberger is a 6.8% of the XLE. Halliburton is 3.2, but you know what? Halliburton wants higher price. You know, this has been consolidating. You're pushing with volume. Halliburton also, I see Halliburton at the shooting star at 57. Halliburton wants higher price too. So energy, folks, bottom line, it looks unfortunate that coming into the summer, summer driving season, that we're going to have a few big numbers coming out of our wallet as we take a look at our gasoline. So I'm going to go over to the gasoline market. We were just talking about that price point. We're at $2.20 right now. XB. I'm going to put the continuous contract up so you can see where I'm coming from in this whole deal. So if we bring this back, what you're going to see is that when we came down in 2014, gas, unleaded gas, wholesale was $3.15 in July of 2014, in June of 2014. We went straight down. We went from $3.15 wholesale, and 7 months later, you were at $1.22 wholesale in December, in January rather. And then what happened is this. Now this was different than the physical oil barrel market. That didn't do the type of bounce that gasoline did. What happened with gasoline, gasoline bounced all the way back up to 218. Well, what happened right here, right now, is that we blew apart the 218 number. We've traded up to 222 this month. And what you have now is that once you're over the 218, guess what? It's game. You know, first game will be up to 258, and then, you know, we really got game up to 315. That's a problem, man. That is big, big dollars if, in fact, that's where that baby's going to go. Now, so that's your energy market. Now, let's go over to the XLF. And when we take a look at the XLF, XLF is trading at $28.19. And the aspect that we have rates going up should be great for the banks, right? Well, what we have happening also simultaneously is that the curve basically is, you know, the market, let's put it this way, the curve thus far, okay, the interest rate curve between whether it's the 2-year to the 10-year to the 5-year has compressed somewhat, but not as much as you'd basically read in the financial press. That being said, this XLF is having a hard time getting to higher price. Well, let me go to the curve first so you can see what the correlation is. If we take a look at the correlation, what you're going to do is first we're going to put up the 2-year. The 2-year, the Treasury will pay you 2.572. So the number to pay attention to is the last 572, because that's the basis points, and that's what the curve relies on. So I'm going to bring that's the 2-year. I'm going to bring the 10-year up. The 10-year, you're going to see is 3072. So what we have is, ooh, that is interesting. 72. Yeah, that's come down. That's That's 7. That's 25. That's only like 30. Yeah, this is flattening out. That's flattening out. This was like a 500 basis points difference. Right now, you're only trading, you get about 250, 300 basis points difference, which is a huge difference. So what happens inside the Federal Reserve and banks is that as that flattens down, it's a problem, because what has happened, of course, is that banks turn around and use deposits on a short-term basis to lend on a longer-term basis. And that's how, so the spread inside of that is where they make all their money. What is going to happen, what actually did happen out here for the banks today, the bottom line is that it's pretty amazing. No matter how much the banks pay in basically fines for fraudulent behavior, it just doesn't seem to matter, because what happened out here today is that the Trump administration, they turned around basically and canned a big part of the Volcker Rule. And one of the big parts of the Volcker Rule, folks, after 2008 was that the banks couldn't use your money, my money, and then leverage that money by trading. Well, guess what? That's out the door. The bottom line is that they're going to be able to end up day trading again. They're claiming, so the part of that rule, the way part of that rule went is this, is that the banks could basically make longer-term trades in the aspect of a year. They couldn't make trades that were at all under 60 days. And of course, the big bank powerhouses, once they bottom line got unleashed about 20 years ago, they've been doing that in a huge way. Well, guess what? They're going to be unleashed again. It's like, and I can tell you, in our lifetime, I suspect we saw it all, because if they can't get the banks under control, which they can't, after the downdraft that we had and the fraudulent behavior inside all the banks, every single one of them, then it's never going to happen. And of course, what's it all about? Well, guess what? It's all about, you only have, what, 100 senators, you get 465 representatives, you just pay them all off, and that's it. Everything goes through. So let's go back to J.P. Morgan. Stay with the banks for a second. J.P. Morgan out here trading 113. That's still having a hard time getting over this February 5th level. Stay right there, folks. We're going to be coming right back. And, of course, our man, Mr. Andy Heck, is going to be coming up with you, growling and prowling with you from 5 to 6 tonight. Go to TFNN.com, right on YouTube, folks. Coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Are you an options trader that's looking for that extra edge when placing trades? David White will be hosting a webinar on May 16th, which is the Wednesday leading up to options expiration Friday in May, where he'll discuss in depth the methodology he uses for trading options near expiration, including swing trading setups and expiration day trading scenarios. Subscribers to each of Dave's newsletters, Path of Least Resistance and the Technology Insider, gain access to this 60-minute webinar, which will be archived if you cannot attend live. Dave has had some great option trades recently for his subscribers. See for yourself the trading methodology he uses when trading options by signing up today for either of his newsletters, and we'll see you Wednesday, May 16th at 5 p.m. for option trading near expiration, analyzing swing trades and expiration day scenarios. For all the details and to sign up today, visit the front page of TFNN.com. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver-producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Let's go take a look at the Bank of America. We just took it, let's stay with this banking sector. So Bank of America, bottom line, also having a tough time getting through the February 5th as well as the March 27th downdraft. So I suspect that these banks are going to continue to have a hard time. If we look at Citigroup next, Citigroup's really weak, actually. Citigroup is still under its February 5th time frame. BRK, Berkshire Hathaway, is the largest weighting structure inside the banking ETF, the XLF, and then good old Warren Buffett's, his company can't make it over this February 5th time frame also. So the banking sector is saying that, guess what, these rates very well could, they could go up, but if simultaneously, if the curve flattens, what you will see is that you'll see the Federal Reserve freak. And bottom line is that they won't be going up on short-term rates as fast as maybe the market thinks. Because what does happen is this. So picture, it's the short term that's going to be the 2, the 5, the 10, and each and every time that the bank rate, and the bank rate that the Fed controls is just the short-term bank rate from bank to bank. Right now, we have an effective rate of 1.70. The rate itself is 1.5 to 1.75, but you can see, if you're watching my screen, the effective rate, that would be the rate last night that the Fed was lending money. It's bank to bank, 1.70. So that's the effective rate right now. And the next meeting is the 13th of June, and on the 13th of June, right now, the Fed Fund futures rate is saying that there's 100% probability that they're going to go up 25 basis points. Bottom line, we'll see where that shakes out. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership, and fly with it. Thanks for being here, folks. Have a great night, a safe night. Stay right there. Our man, Mr. Andy Heck's going to come up and growl and prowl with you. And, of course, we look forward to speaking to you right back here tomorrow morning, 8 o'clock. Wow! Go get 'em, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.